Welcome back. You're watching D Street. Well, let's now go across to Mohit Mirchandani, Head of Equity of Taurus Mutual Fund, who joins me from Mumbai. Thank you very much, Mohit, for joining us this evening on NDTV Profit. Mohit, just to get started, global equity markets, including our markets, have seen quite a bit of selling pressure in the last week or so. What are you making out of this current selling pressure that has resumed to our markets?
Well, a few things. One, from an India perspective, I probably mentioned this the last time on your show, we've just run up too fast. Our expectations of the budget, on the formation of a very strong government without all the coalitions that we were scared of, caused maybe FIIs and investors to expect too much from this government, and that too in a budget which was just going to come around a couple of months later. I think that was the folly. That was expecting too much out of a government. On top of that, we have the next budget which will come around in February anyway. So you have a budget announced this time. It goes up to Lok Sabha, Rajya Sabha for approval. By the time it really gets approved and you can even implement anything, you're into February of next year, time for the next budget. So I think maybe the street expected too much from the government in this budget policy. On top of that, I think we decided to re-rate India and give it a couple of extra PE multiples because we now had a stable government and we were in for big bang reforms. And I think the moment we didn't get any hint of that at the budget, the correction for us really accelerated.
Mohit, of course, a number of institutional investors, including domestic and foreign, were waiting for cues from the budget to, of course, get all that liquidity back into the markets. But somewhere that liquidity has pretty much reversed. When do you see all this money coming back in? Because it is on the sidelines. It is not driven by fundamentals because it's just literally a liquidity-driven rally is what we've been talking about. When do you see all this money returning back to the markets?
I think... let's put it this way, if I were an FII and I have a choice of investing in Brazil, in China, in any part of the world, look at the competition I'm up against. We have the commodity cycle which is probably bottomed out and is going to move up. That's good for Brazil. Brazil is fiscal surplus. India is a commodity user. It is deficit on the fiscal account. On top of that, the budget did not really, give us too many clues about the government even being concerned about the fiscal side of it. And so, as an FII, that would make me very nervous till I see some commitment from the government in terms of fiscal discipline. As an FII, I would probably, sit on the sidelines or put my money elsewhere.
Right, Mohit, we'll come back to you in just a few minutes. Of course, Mohit will be with us, but Mohit, it's over to you again. Mohit, what kind of a correction are you expecting for our markets? In fact, technically, charts are indicating Nifty heading all the way down to 3,700.
I would expect the so-called frothy multiple, which was assigned to India thanks to a stable government and the expectation of big bang reforms. We probably went ahead from trading in a 13 to 15 PE band to 16, 17. I suspect that couple of PEs will evaporate, and so I would say, depending on what your estimates are for next year, we could be in the 11,500 to 12,500 range is where I think buying might begin to emerge.
Right, Mohit, just quickly, earnings season kicks off as well tomorrow with, of course, Infosys announcing its numbers. What are your Sensex earnings expectations this time round?
For this quarter?
Yes, Mohit.
We haven't got that on a Sensex level. We've got certain stocks that we're tracking.
Right, Mohit, then if I had to talk sector specific, rather, what sectors are you most bullish on right now, keeping in mind that earnings is around the corner and, of course, there are some kind of concerns, and what are you watching out for? Rather, what sectors do you like?
We are quite optimistic on sectors like auto, cement, where the numbers have been quite encouraging on a month-to-month basis. We are also looking at structural India stories, and that includes infrastructure. It includes stocks in the education space, social infrastructure, so that includes healthcare as well. The only thing is we've got to decide what point you want to enter. These are surely all India themes. We've just got to assess what level of valuation you're comfortable with.
And what level would you say that? Would you wait for earnings to come through? Would you wait for that 11,500, 12,000 mark, or would you go out there and buy?
It's stock specific. So if certain stocks hit our comfort levels even before the broader indices correct, we'll go ahead and buy them.
Right, Mohit, also just to talk a little bit more about how things are looking when you talk about valuations right now. They look a little overstretched, not just for our markets, but also globally. That's become a bit of a concern. Is that something you'd be worrying about right now?
I think the time to worry about that was about a month ago. But I think that correction has started. I think valuations are beginning to get a little attractive. They're not there yet. In some cases, in some companies, they have become attractive. But for the broader markets, there is a little room to go before risk-reward turns favorable.
Right, thanks so much, Mohit, for talking to us this evening on NDTV Profit. That was Mohit Mirchandani of Taurus Mutual Fund sharing his views with where the markets are headed. He's not very convinced with the way the Sensex is looking. Believes 11,500, 12,000 is the kind of targets we're talking about on the Sensex. But for now, is convinced that the correction has started and the India story continues to look hot. So sectors like steel, auto, infrastructure is something that he would be pretty bullish on. Well, that is all the time I have on D Street. Thanks for watching the show.